Good evening and welcome to this session of the live virtual coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. So here we are again this evening and we have quite a lot of our regulars attending. Alok is here, Dhyanesh Ingle, welcome sir, and Mr. Bhatsardi, Sunil, Lakshmi, and so Dhyanesh wants the mantra. So let's begin with that. Sahana bhavatu, sahanau bhunaktu, saha viryam karvavahi, tejasvina vadhitamastu, ma vishavahi. Om Shanti Shanti Shanti. Fantastic. That's nice to begin, and let's pray that our class goes on well. We had jumped into the important topic of share capital and debentures. I have already given you inputs on the nature of share capital, its division, etc., etc. We moved on. Yesterday, rather in the last session, we were discussing what we call transfer and transmission of shares. I'm sure by now you have become familiar or you have understood the difference between transfer and transmission. Yes. So we have, okay, Mr. Sunil Kumar wants me to tell a quote from Bhagavad Gita. Ji, not now, abhi to nahi. Wait, maybe sometime in the middle of this session when substantial coverage has happened, there is a message that I might like to share from the Bhagavad Gita, but let's see. A very, very powerful example from the Bhagavad Gita that could keep you focused on your preparations and on your thing, but let's see. Okay, not no. Abhi to nahi. No? Abhi nahi. Good. Thank you. But then it's nice to know that some people are interested in even learning a little bit. In fact, without quoting from Bhagavad Gita, let me quote from Bhajagovindam, where Adi Shankara says, Bhagavad Gita kinchitatita, Ganga Jalalava Kanita Pita. Okay, so he says little bit of Bhagavad Gita if you have learnt. So let us see a little bit of Bhagavad Gita sometime later, not now. Coming back to the mundane topic of company law, we have transfer and transmission. So by now you know what is transmission. Transmission is an act of operation of law. So there is a death or there is a insanity or insolvency, etc. In all these cases, there is no transfer because there is no volition. V-O-L-I-T-I-O-N. Volition. Volition means by voluntary act of a human being. See. So A wants to buy the share. He goes to B, says, sell your share. B agrees to sell. The transfer takes place. That is transfer. A dies. The estate is now taken over. His assets now form part of his estate. So the executor or assignee has to finish the whole thing, or whatever happens, he has to finish it. And finally, the legal heirs will have to now get their shares transmitted to their name. Such an act is called transmission. It's evidenced by legal heirship certificate, whatever. We saw this elaborately in the last class. One of the main important purpose of this particular sections or chapter on transfer and transmission is shares of a company are freely transferable. Shares of a company should be freely transferable. I repeat, I said are, no, I said should be. With one notable exception, which is private company. Even for a private company, my dear friends, it is not that the shares are not freely transferable. Please. There is no prohibition on transfer of shares of a private company. There is only a restriction on transfer of shares. And that too, if any. They might not have a restriction also. But the private company may, by its articles, restrict the transfer of its shares, if any. How they will restrict? They can maximum say, if a member of a private company wants to sell his shares, an offer should be for, the articles will provide this. Okay, they will say there is a restriction subject to this. So there they will say, if you want to sell, then first, an offer should be made to the existing shareholders. evaluation should be done by the company's auditor or by a registered valuer. All this will be in the articles, not in the act. The articles will provide for the manner. If the articles are silent, then there is no restriction. Okay. But usually most private companies will restrict the transfer. They will say that first the offer should be made to the existing shareholders. If the existing shareholders do not take up within say 15 days or whatever the articles provide, then the member is at liberty to transfer it to anybody. And the board of directors have to register the transfer. They cannot refuse to register the transfer. In fact, while on that, I have a very interesting incident. About 15 years ago, a huge, there was a company which owned a huge multi-story building, about 8-floor building, which was owned by a very old family. So they wanted to sell and move to Mumbai. So they came to me. It was a private limited company. And so they wanted to, instead of selling the building, see, the company was owning the building. Instead of selling the building, they were planning to, in fact, it was my advice that they don't sell the building, rather only sell the shares. There will be a capital gains, no doubt, based on the valuation only. The underlying value would be the building's value. I'm not trying to avoid capital gain here. Stamp duty can be avoided, one, ease of transfer, etc. So you can bargain on that. So that they agreed, and the incoming party, the buyer, agreed to acquire the shares rather than the building. And that also, I said, that will also solve one more problem. The company does not have any other asset. Suppose you sell that asset, you have to go for winding up all that. That's elaborate. Whereas in this method, you sell your shares completely. About 5 of you sell and completely and come out. You take your money, go to Bombay, enjoy yourself. This will own the company and the building. Let him do whatever he wants. Let him demolish the building, develop it. Whatever money he makes, let him pay tax in the company and finish it. So the buyer was also willing to take that, and they both came. Buyer happy to come in that method. They came. But one problem was, out of the 5 fellows, one guy who was holding 15% or something like that, 16% or so of the shares, was unwilling to sell. Not because he was not willing. He was simply thinking better bargain, better bargain, better bargain. But somewhere the other shareholders, about 85% of the shares were held by the remaining people. Now they wanted to sell and go. So what to do? So finally I said, look at their articles. You are a private limited company. What does it say? Valuation. We did a valuation. Here's the value. Make an offer to this gentleman. You are going to sell to the third party now. Don't sell. You make an offer to this gentleman. You tell him, boss, we are planning to sell. If you want to buy these shares, this is the valuation. Buy it. If you don't hear anything from you for 15 days, we will transfer. Thereafter, the 85% Walas, what they did, they sent a notice, legal notice. I only dictated it, and we put it in a register post, sent it to him. And they said, we are all going to sell. If you want to buy, this is the amount. DD should be prepared and sent on such and such a day. That fellow has no money to buy anything. Forget. So he also wants to sell. So the minute he saw this letters, 15 days, he kept quiet. On the 16th day, he came and he said, what is the final price you tell? I will also sell. So finally, all of them sold it to the opposite party and the other party, and the company was disposed. Okay, and they got their money, etc., etc. That's the point I'm trying to make here, my dear friends, is there is no prohibition, only restriction. So purpose of these provisions is to ensure that transfer happens smoothly. Okay. In case the company refuses to register transfer, so dire consequences. That's what you have to know. In this chapter, what is the most important gyan, I would say, is consequence of refusal to register. Physical certificates, the format of the share for instrument of transfer should be in SH4 and all that. Only for physical. Okay, we saw all this. In case there is a loss of the instrument of transfer, not the share certificate, loss of instrument of transfer or delay in submission of instrument of transfer, board at its discretion and conditions of indemnity may register the transfer. It is at the discretion of the board, but they better not. See, suppose there is a loss of IoT, you have to prove how you lost it, etc., etc. Again, remember, this is meant only for physical certificates. When there are physical certificates, you have to go through the IoT, means instrument of transfer. Okay, IoT. Please make a note of it somewhere, because I'll be using this abbreviation regularly, instrument of transfer. Okay. For government companies, these provisions, for example, the form and all that, do not apply to bonds issued by government companies. Similarly, the provisions mentioned above not to apply for shares held by nominees in a government company. Okay. Now, whenever shares are transferred, there should be an application for transfer. Whenever there's a transfer or transmission of partly paid shares, where partly paid shares are being transferred. Now, it is very important to know who is making the application for partly paid shares. See, what is the danger with partly paid shares? A is transferring shares to B. B is the transferee. A is the transferor. Now, A, it's a partly paid share. So there is a liability. Transferor is liable. Now that liability is also going to get transferred. In case the application for transfer of partly paid shares is being done by the transferor alone, that is only the transferor is doing it, then a notice has to be given to the transferee in form SH5 and the NOC should be received from the transferee within 2 weeks from receipt of notice. If not, the transfer shall not be registered. But believe me, I am yet to see one like this. First of all, I am yet to see partly paid shares. Even assuming partly paid shares are there, I am yet to see transferor alone making the application. Usually the transferee also will sign. Then no objection is needed. No objection certificate is not needed. But if the transferor is doing it, then you have to give notice to transferee in form SH5 and NOC is to be received from the transferee within 2 weeks. If not, the transfer shall not be registered, right, by the board of the company. We already saw something about International Financial Services Center, IFSC. You will come across this term regularly, especially it will come as an exemption. Many provisions of the Act will not either apply to an IFSC or will apply with modification to an IFSC. Basically, an International Financial Services Center is a financial center that caters to customers outside the jurisdiction of the domestic economy. It's almost as if it's a foreign country within India. For example, in Hyderabad, you have what is known as Cyberabad, the IT city, which has a lot of IFSCs, International Financial Services Centers. Basically, these are back-end operations or financial services for foreign companies or customers outside the jurisdiction of domestic economy. For a lot of exemptions are available to them and protection is available to them. Therefore, many sections of the Companies Act will not apply to IFSCs. Okay, International Financial Services Center. A company which is running an IFSC is called an IFSC company. International Financial Services Center. A company which is running an IFSC is called an IFSC company. Okay. So this IFSC is also known as an offshore financial center since it deals with flow of finance, financial products and services across borders. So what these people are doing is transferring funds, dealing with funds for a foreign company sitting in India. Why has the government encouraged IFSC? The IFSC company is one which is licensed to operate from an IFSC. So there is an IFSC, International Financial Center. A company which is operating from an international financial center is called an IFSC company. It has to be physically located in the center. Okay. Then what happens is, and it has to cater to the customers outside the jurisdiction of domestic economy, which means their income, the income of an IFSC company would come from through net foreign exchange realization, which means Indian economy is getting foreign exchange. Therefore, we want to promote foreign exchange. Secondly, we have a huge population of skilled and employable youngsters and labor, especially in the white collar area. See, forget blue collar. Actually, we lack blue collar. This is something that many people don't know. What is blue collar? You know, this blue collar is a skilled technician as against a white collar like you who would be employed in finance or in HR or whatever, or a clerk, even a clerk, now you don't use the word clerks. There is no designation called clerk, CLERK anymore. Instead, all clerks are now executives. Seriously. Whenever you find the word executive, remember, this fellow was once upon a time a clerk. Now they don't call them clerks. They generally tell them executive. executive finance, executive external affairs, something like that they give title. Basically clerk. Okay. So the point is the clerks, they are called white collars because their hands will not become dirty. Their collar will always be white. Whereas a blue collar man, I have to go there and work in the factory. I have to really work with machines. I have to work with grease. So I'm called a blue collar worker. So our blue collar workmen and blue collar, both are there. So the point here is we don't have that many blue collars in India. We need to train skilled workmen and blue collar workers. But we have a lot of white collar. B.Com, M.Com, like that. We have a lot of people. BSc, computer science, BBA. So we need to employ these people, and these so-called IFSC companies are able to employ these people. Pay them a good salary. So if you can speak well and communicate, you get a good salary and you can work in this company. So we also increase the employment potential in those areas, right? So a city which has developed an IT center, IFSC center, would have a lot of employment opportunities for its youngsters, white collar people, graduates and all. So that is the reason why we give. So there are many exceptions to IFSCs. That's all. Other than that, there is nothing great or remarkable about IFSC. It's enough if you know. That is why I introduced IFSC to you at this point. Wherever we come across the word IFSC, please remember this definition and this thing. Correct. Now, company shall, unless prohibited by any law or order of court, deliver securities as follows. Security means physical certificates or credit in a depository account. Delivery means both delivery of the physical certificate, in the case of physical certificate, or delivery of the electronic, or shall we say, the records of a depository, updating your DP account. Either way, it should be done. In the case of certificates, it should be done within 2 months from the date of incorporation. In the case of subscribers to the memorandum, it has to be done within 2 months from the date of incorporation. In the case of any allotment of, if it's a listed company, straight away it's going to be in dematerialized form, which means the issue will open and close. Once the issue is opening and closing, almost within 48 hours, it has to be credited into the DP account. That is covered by the SEBI guidelines. Got it? Straight away. Because it's a listed company, it won't come here. It will be covered by SEBI guidelines. Physical certificates, if it is a subscriber to the memorandum, the certificate should be delivered within 2 months from the date of incorporation. In the case of any allotment of any of its shares, that is subsequent to incorporation, after the subscribers, you will start allotting shares, right? So those share certificates should be delivered within a period of 2 months from the date of allotment. Similarly, in the case of transfer or transmission of securities, suppose I am the transferee, I am sending the shares for securities for transfer. You have to complete the formality, put my name in the register of members, note on the certificate that I am the owner, and return that certificate, deliver that certificate within a period of 1 month from the date of receipt by the company of the instrument of transfer or the intimation of transmission. Either the instrument of transfer or the intimation of transmission. Whichever it is, within 1 month, you should give. See, we will be seeing this a little later. We will see what is the consequence of failure to register transfer or transmission of securities. Okay, very important topic. We'll see that little later. In the case of any allotment of debenture, the certificate, physical certificate, should be delivered within a period of 6 months from the date of allotment. Right? For an IFSC, this delivery of securities may deliver securities within 60 days. Within 60 days. Okay, once it is 60 days is given. As against 1 month for any other company for share securities. IFSC may deliver securities within 60 days. Okay. Again, we are calculating a time limit based on the duration. Again, hint, do not include date of incorporation while counting the number of months. For example, if within 2 months, anything, don't include that date. Okay. Date of allotment, date of incorporation, date of receipt of the company, date of allotment, whatever. Don't include that. Okay. So Shreem Lakshmi Jewelry Stores Private Limited was incorporated on 27th August 2020 with 30% subscribers to the memorandum on association. With an authorized share capital of 1 crore divided into equal number of shares of rupee 1 each. Whatever. Each subscriber subscribe for 1 lakh when it needs to deliver to the subscribers. What is the duration? Within 2 months. So what is the date of incorporation? 27th August. So don't include that. Take 28th. Start counting. How many days? 2 months, not 60 days. Please note the difference between 60 days and 2 months. 2 months means date to date, but not including 27th or 28th. Right. So 28th August. Right? 28th August. Correct? Then September, October. So 27th October is the correct answer. Why? 2 months. What is it? You're going to study, I think, General Clauses Act. You'll be studying General Clauses Act. Absolutely correct. You'll be studying General Clauses Act in a Jyoti Jha and Abdul and Dhyanesh Shingle have given the correct answer. C. Correctly. So they have understood the topic. Beautiful. And you're going to read General Clauses Act where you'll also learn that when it is mentioned as days, you have to actually count. Do you remember earlier example, I actually counted the days. But when it is given as month, then you will not count the dates. You will only take from day to day. For example, if I'm starting on 28th, 1 month will get over on 27th of next month. 2 months will get over on 27th of the next month after that. So in this case, August, so September, October. On 27th October, 2 months again. I should not take 27th into account, is the point. Right, sir? Now, all our discussions were on shares held in physical form, where they are held in dematerialized form, where the securities are dealt with in a depository, that is in dematerialized form. The company shall intimate the details of allotment of securities to depository immediately on allotment of such securities. Immediately on allotment. Of course, the word immediately is used. So immediately, how will you go do it? Means, so 24 hours or 48 hours, you should do it. Immediately means they are immediate by EOD. Suppose the allotment happened today, by EOD, you should do it. End of day. EOD means end of day, or at least next day. Okay, some national emergency, something, another 48. You can take 48 hours, some reasonable time. But it has to be done. No, all these rules are only for physical certificate. Depository, no. Similarly, transfer of shares in dematerialized form. Transfer of shares in dematerialized form. Easy, immediate, instantaneous, or at least 1 day. Usually, I'm sure you are aware, the period in markets, in the stock market, we call it as T plus something. T means date of transaction. So today, delivery or payment. Suppose you buy, you have to give the payment within T plus 2. Similarly, delivery of the certificate, the shares should be made within T plus 2. In case you do not do it, actually it's T plus 1. But for customer, they're giving T plus 2. And you have to, because if you have to deliver to your broker, who will then deliver to his counterparty, the other broker, and to us. Okay. So from the date of transaction. So that it should be. So invariably, if you're doing some kind of trading through a broker, he will do the sale, he will issue the contract note online, and then he will ask you to transfer the shares, or from your DP account, he will ask you to. Nowadays, what the broking houses do is, they give you an online trading account, automatically you operate that, so that the minute you sell, by a next transaction, it will go from your account to their account, trading account. But suppose you don't want that facility of trading online, no problem, they will do it, but you will have to give them a power of attorney. Usually they take a power of attorney to operate your DP account, to operate your depository account there. And they use it. So they use the power to transfer. Okay. And so this is the thing by which today it is done. In case there is a default in compliance with section 56(6), right? In case there is a default in complying with section 56, okay? Transfer and transfer, what are the rules and all that? Any mistake, anywhere, okay? Default in compliance with 56. Then under section 56(6), penalty for default in complying with section 56(1) to 5. Company, a fine of 50,000, and an officer in default, fine of 50,000. I think Parthsarthi is correct. Maybe he's doing a lot of active trading. I think for trading account, it is T+1. That is, if you buy today, you have to deliver tomorrow. Correct. I think it's not T+. It was T+2 about, I think, 1 year ago, it was T+, more than that, right? It changed, right? Correct. It is not T+1. See, I don't deal with this because I don't do online trading. I rarely, buy and sell. I buy once in a blue moon, hold, and rarely sell. Selling will happen once in, say, 9 years or 10 years. When the market is in the peak, I'll sell. Otherwise, I'll simply buy, keep. I don't do that much trading. So I'm not very popular with my broker also because I don't do much trading. Agreed. Thank you for educating me. Now it is a T+2. Not T+2, it is T+1. Chalo, whatever it is, within that time, it has to be done. So it's all quick. Matter of. Okay. Good. Yeah, I'm not just a long-term investor. I'm also what is known as a value investor. I invest for value. I buy companies which are having high value, very low prices, hold for a long time, make multi-baggers, and I go. That is my philosophy. So I don't deal. So which is why sometimes, with all the money I've made in the market, my knowledge of the share market will be very limited. The actual nitty-gritties will be very limited. I don't deal with that direct every day on a day-to-day basis. I don't like to do that. Try to be away from the market. Try to be away from all the nonsense information that keeps coming about the market. Simply watch. If I see a good, but I study the companies. I study about 50 companies, 60 companies which are on my watch list. I keep on watching them, news about them, anything, balance sheet, whenever it comes, I do an analysis, do a valuation, keep it. If I find an opportunity, I go there, buy, walk out. That's all. Otherwise, I'll simply wait, watching. I won't even bother to get there and do anything. And if it is not in my watch list, I don't even know what is happening to that company. I don't care. No problem. Whatever it is, T+2, T+1, consult your broker, do whatever he says. Okay. Why am I breaking my head? This is not that subject. I'm merely making you alert that dematerialized shares, once sold, have to be delivered within a particular period, which is decided by SEBI and informed to the stock exchanges, who in turn enforce it on their members, who in turn have to enforce it on their clients. Please understand, any rule made by SEBI will be binding to the stock exchange, and the stock exchanges will bind it on their members. Making it binding on the customer is up to the broker, because the stock exchange does not know the ultimate customer. They know only the broker. Suppose one customer has bought Infosys and has not paid, or has sold Infosys and not delivered. That is between that customer and the broker. As far as the stock exchange is concerned, broker's account will be immediately closed. If any shares are there in the DP account, it will be sold and it will be closed. Okay, otherwise, that day evening, it will be closed out. And he has to, the next day, the T+1 or whatever you are doing, it has to be closed out. Whatever lost profit, it will be sold or purchased. Money will be paid to the other party, closed. If the broker is losing money, that is something he has to take it up with the customer who did not do it. Sometimes, when we are discussing transfer and transmission of shares, we will somewhat be getting into stock market also. So that sometimes I will do it. Yeah. Buy right, hold tight. That is a very nice way of, blunt and interesting way of putting the philosophy. No problem. Good job. Now, fraudulent transfer of shares by depository means a depository intentionally or a depository participant has transferred shares with an intention to defraud. Remember, depository or depository participant has a lot at stake because they control. They are almost like a bank. In terms of stock, shares, they are a bank. They are like a safe deposit locker. You're putting all your shares into that depository. So there should be a very stringent punishment for depositories. Therefore, they said any depository or depository participant who has transferred shares with an intention to defraud. That is, there is no transfer, but they have quietly transferred it to some account. If they do something, some nonsense fraud like that, then straightaway action under section 447. But of course, it is not only the penalty. There will be constant checking and monitoring of depository participants. Audits will be there. Continuous internal control mechanism monitoring. Sorry. So they have to be above reproach in that. Otherwise, the trust by the public will be gone. So everybody has a vested interest to ensure that intermediaries are honest and honorable. Because even if one intermediary is seen as fraudulent, then the entire system will become suspect. Therefore, stringent punishments have been prescribed for fraudulent transfer of shares by depository. Also, punishment for personation of shareholder. That is, you are not the owner of a share, but you are providing false information, deceitful personation. That is, you have falsified the identity document. You have forged the ID document, whatever. And you are using that and claiming that you are the owner of security. So deceitful. Deceitful means lying or telling lies. Deceit. D-E-C-E-I-T. Deceit means lie. Deceit means lie. Deceitful means lying. Okay. Or false. False personation. Falsely claiming that somebody is the owner of any security or claiming any interest in the company. Why they are using that interest in company? Because there could be a company without any shares, no share capital. In those cases, there will be interest in that company. So this person is falsely claiming to be the owner of that security or the owner of the interest in that company or of any share warrant or coupon issued in pursuance of this act. And thereby, no company has issued share warrant. Share warrant, not important. It is there in the law, they have included it. No, to my knowledge, no company. If you know any company, please. But even if you know, you will be very surprised that there will be one or two companies maximum, which is not there. Right? To my knowledge, no. If somebody, Abhishek Pandey or Alok wants to put a name there, you put it. But even if you put one or two names, that doesn't change the fact that share warrants are not issued regularly. They are a rare occurrence. They are a rare occurrence. So why I am telling this now? Don't break your head on that. Basically, share warrants are bearer instruments. Means once the share certificates or shares are converted into share warrants, what will happen? The names of the members now will be removed from the register of members. Instead, it will be noted that these shares have now become share warrants. So-and-so number to so-and-so share warrant. And then the share warrant will be given to... Remember, in dematerialized form, you cannot have share warrant. Why? Because what is the whole point of a share warrant? It is a bearer instrument, which means what? The identity of the owner will not be known. Whoever is having physical possession of that warrant can claim the benefit. Can come and say, I am the owner and take it. Okay. He can apply for share certificates. Have his name entered as the owner. By merely producing the share warrant physically, he doesn't have to show any instrument of transfer, nothing, ownership. By possession, you become the owner. Okay. So that it becomes like, it's a very, very, shall we say, easy method of money laundering. Na? You don't have to prove how you got it. Simply you have to come and take the share certificates and go. So no company, to my knowledge, has issued share warrants, but still it is there. So if you falsely impersonate, I don't know and I don't want to know. Wow, that is, why are you being so reactive? I don't know. Don't want to know. Yeah, better not know. Okay. So thereby obtains, because sometimes what happens, students ask any examples like that. So I've been so used to students asking, I keep overreacting to the share warrant. Similarly, stocks also. Share and stock. No company has issued stocks. Either shares, stocks or stock of shares or stock of debentures. No company has issued as of now. But it is there in the Companies Act. Possibly because it is there in the European law, it's here in India. But in India, we do not have stocks. Yeah, fake identity. Creating a fake identity and claiming to be the owner of a security or interest in a company, or you claim that the share warrant belongs to you, or you give the share warrant and give a false identity to get registered as a member. Whatever you do, okay, he obtains or attempts to obtain any such security or interest or any such share warrant or coupon, or receives or attempt to receive any money due to any such owner. Whatever happens, if there is an impersonation, then straight away imprisonment, minimum 1 year, maximum 3 years, and fine, rupees 1 lakh, maximum rupees 5 lakh. So it is not possible to compound this offense because the conjunction and is used here between the two. Therefore, imprisonment cannot be avoided under the Companies Act by compounding. We come to possibly the most important part of Thank you, Alok, for the trust reposed in me and putting this up. Thank you very much. So now, please note, Alok ji, this is important. 58 is important. You might get a question here, either in the form of a descriptive or a problem or an MCQ. So be prepared for it. Where a private company refuses to register, transfer or transmission, the following rules apply. I already told you that even in the case of a private company, there is no prohibition. Some companies may insist that you should offer it to the existing shareholders before you go to the outsider. If you comply with that and then go to the outsider and transfer, and that fellow comes and wants you to register the transfer, if the company refuses to transfer or refuses to register the transfer or transmission, private company, then the following rules will apply. Okay. First of all, this date is very important. Date of delivery of IoT or intimation of transmission. Okay. From the date of delivery. So what happens? The instrument of transfer together with the physical certificate is registered. From that date of delivery, you have to calculate 30 days. 30 days. Notice to be given to the transferor and transferee within 30 days if in case you are refusing to register transfer. If you are not going to register the transfer, then within 30 days, you have to intimate both the transferor and transferee. Along with the refusal, you shall also give the reasons for refusal. Reasons for refusal shall be given within 30 days. So, the instrument of transfer was delivered along with the date of along with the certificates. From that date of delivery, you wait for 30 days. Nothing happens. Okay? No information, or you get a refusal. Now, once you get a letter of refusal within the 30 days from that date, you receive the notice of refusal. Within 30 days of receipt of notice of refusal, the transferor or transferee, as the case may be, can file an appeal to appeal by transferee to the tribunal. Because who is the interested party? Transferee. Because transferor has possibly taken money and he has given certificate. He has signed the document, everything, and he has given it to. Now you have to go and take it to the company and register. You go to the company refuses to register. Now, within 30 days, you get a notice of refusal saying, we won't register, blah, 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 some legal advice they have taken, some stupidly they said. See, in my own example, they could have done that, which is why I had a whole team of lawyers doing it. I hired the best lawyer and I said, look here, this guy has to sign everywhere that he will not object later. And then I also did one thing. We transferred the shares. Then we had a board meeting. At the board meeting, the transfer was registered. Then the existing directors resigned and the new directors were appointed. Everything happened. The new directors were appointed. Then the existing directors resigned. The board of directors took over. The transfer was already registered by the old directors so that they cannot object. So everybody attended. Attendance was taken. I was available as witness. Then I had one company secretary, one advocate, everybody sitting, and because the value of the property at that time itself was worth 60 crores. Value of the property. Today, imagine what it will be. Around 15 years ago, 60 crore worth property at that time. So we can't play games. Okay. So everything was properly documented and done. Why I am giving this example to you? To give you practically how transfer and transmission for a private limited company can happen. Suppose at that board meeting, the old board of directors refused to register the transfer. What nonsense. And then they give some stupid reason that it should have been offered to the existing shareholder. It was not offered. Some nonsense they give and they refuse. Whatever it is. Once you receive the notice of refusal, within 30 days, you can make an appeal to the tribunal. The transferee can appeal to the tribunal within 30 days of notice. Okay. I have made an application. I have sent the instrument of transfer. 30 days I wait. 30 days I wait. Nothing happens. No news. Then what I can do? I can prefer an appeal within 60 days from the date of delivery of instrument of transfer in case no notice is given. So 30 days from the notice of refusal. Notice of refusal should be given with reasons, therefore, within 30 days, from that date, within 30 days, you can appeal. Or, if no notice of refusal is given, the company is simply sitting on it, then once the 30 days is over, okay, within a period of 60 days, from the date of delivery of instrument of transfer, you can make an appeal to the tribunal. Please note the arrow marks here, which are very important. The appeal is not 60 days from the date of expiry of 30 days. It is 60 days from the date of delivery of the instrument of transfer. Okay, sir? Clear? Good. Now, moving on. We spoke about private company. Now we are talking about shares or other interest. Whenever you find the word other interest, please remember we are talking about a company which does not have share capital. So there will be an interest, say 25%, 30%, like that. It's an interest. He has a 25% interest in the company. Like that. Good. So, shares or other interest of a member in a public company shall be freely transferable. They use share. Nobody can control. That's why, if this assurance is not there, dematerialization will fail. Okay. So, once it is dematerialized, transfer has to happen seamlessly and instantaneously. You cannot control, which is why whenever there is a transfer through dematerialized form, automatically CDSL and NSDL will capture it. They will get the DP advisors, all that online, and then they will upload it. Then they will process it. See, remember, every day it happens. Every day at the end, when the market gets closed, all the transactions are to be accounted by both either NSDL or CDSL. All broker accounts are there, and all that will be set off. Because the same broker would have sold 1 crore Reliance, 1 lakh shares of Reliance, example, 20 lakh shares of Reliance. He would have purchased also. So net positions will be there. All that will be squared up, interpositions will be squared up. This complete housekeeping work will be done by a separate exchange within the stock exchange. Okay? Clearing house it is called. The clearing house will do all these things. And then finally the information will go to the NSDL or CDSL. Okay, and finally, that information from NSDL or CDSL, the registrar is there now for the share transfer agent. That share transfer agent, he'll have a land leased line, secured leased line. Means exclusive line, not your Wi-Fi line and all, no, or private VPN and all, virtual public private network, no. It will be a pakka leased line, protected like anything, even from data puncturing. Of course, heavy firewalls will be there, perimeter security, and finally it will be done. And so then that data will be downloaded from CDSL and NSDL, and then the program, the software will be there, the bot will run, and quickly it will post. It will take the data from NSDL, CDSL, using the DP account as the link, or PAN number as the link, depending on PAN number or DP account, it will quickly go and post. So for each member, it will see what are the fresh transactions, buy, add, sell. So at the end of the day, register of members will be updated by the company's share transfer agent. A few companies also maintain their own in-house shall we say, secretarial department where the register of members is maintained by them using a software. But as you know, I'm an information systems auditor, IS auditor, and one of the works that I do is I audit share transfer agents, the IS securities, IS security. So I've rarely seen companies doing it on their own. Mostly they give it to share transfer agents, and share transfer agents generally have very powerful securities. May not be as strong as depositories, but definitely strong enough. Firewalls, penetration testing of firewalls is done continuously to see that nobody can access. Example 2, section 58. Both are 58 now. So what happens is, private company, you are the shareholder of a private company. You want to sell your share. You make an offer to the existing share, or you want to sell your share to an existing shareholder. You sell it. Then you sign the instrument of transfer. Then that shareholder takes it to the company and says, I have purchased these shares, please register the transfer. He gives the instrument of transfer, blah, blah. Everything he does correctly. He is complying with the rule. He gives everything correctly. Now, from the date of deposit of the instrument of transfer, the transfer has to be registered within 30 days. If you do not, then you have to give a notice of refusal, board of directors. If the board gives a notice of refusal, the transferee, that is the person who bought it from you, can go on appeal to the tribunal and say, hey, this company is not registering the transfer, kindly do something. If tribunal feels that they are wrong, they will direct them to, I'll see the remedy, we will see it. Okay. And similarly, the transferee can go by, see again, this is a common provision for both transfer and transmission. So in this case, the word transferee is used. The word transferee includes the person to whom the transmission has to happen. Okay. So you go on appeal. In case the company doesn't do anything, keeps quiet, they received your instrument transfer, like putting it in a well, no sound, deep well. After that, no news. Then wait for 30 days. Then within 60 days from the date of delivery of instrument of transfer, you can go on appeal to the tribunal. This is 58. For 58, for public companies or shares are in a public company, they're freely transferable. Where a public company without sufficient cost refuses to register transfer. See, this is a public company which is not listed. Because if it is listed, this whole problem is not there because it's dematerialized. DPD, depositories are there. But this is a public company which is unlisted, or the shares are not yet to be listed, no application has been made. Such a company will have physical certificates, may have. Only there is a reason they can get the instrument of transfer. And where a public company without sufficient cost refuses to register transfer or transmission, then again the same thing now. Date of delivery, from that date, the refusal has to be given within 30 days. Now, appeal in case of public company, the transferee can appeal to the tribunal within 60 days. Friends, here it is 30, 30, 60. Here it is 30, 60. And in case there is no notice of refusal, you can go right up to 90 days from the date of delivery of the instrument of transfer. So what you should do is you have to wait for 30 days. And once you not got anything, then within the next 90 days, you can go in on appeal to the tribunal. Okay, I have given my best example. Now, if Mr. Sunil Kumar still has not understood, specifically you ask me what you have not understood, I will explain. This is a fairly simple provision. It is a provision for giving an opportunity for appeal to a transferee whose transfer is not registered. Either it's refused or nothing is done. Then, depending on what is the situation, he has, in the case of private company, either 30 or 60. In the case of public company, 60 or 90. If private company has issued right shares and the shareholders has renounced the rights to third party, is it also a transfer? Principles, if understood, some questions will not be worded like this. First of all, in the case of a rights offer, at the time when the right is being renounced, remember the share itself has not come into existence. A has been given a rights offer. We'll be seeing rights offer very shortly, but in principle, we can talk about this. See, remember, a rights offer is being made to the existing member. That existing member doesn't want to apply. Now the law gives him the right to renounce. In fact, I don't know why you're going for a private company. It can be even a public company. Whatever it is, when the rights offer is made, I get the right to renounce. Once I get the right to renounce, then I renounce it to a third party. Then the third party has to apply and get the share. Only then it will be a transfer of a share. I mean, then he will transfer. At this point in time, the share itself has not come into existence. What is being transferred is a right. What is being transferred is a right to buy the share by way of renunciation. For that, the form is there. Once you fill the form and send it, they have to do it. See, if the company does not allot the shares to the renouncee, this section is not applicable. You have to go to the articles and see what it provides there. Okay? Because this section does not cover rights. If basically rights, transfer of right is not registered anywhere. Basically, the renouncer will sign and say that, see, the right form itself will be two parts. One would be an application, the other would be a renouncing. So where if you are applying, you use the above form. If you are renouncing, use the part B, wherein you will mention whom you are renouncing, and then you will say, you just sign it, and then he will take it, or it will be done by, it will be that will be done, and then he will see. Today, believe me, my dear friends, you are giving an example of a private company, which means it will be done by paperwork. But if it is done for a listed company, it is all online. See, rights, there will be no form and all that. There will be a link. You go there, they will ask you, are you applying? No, yes or no. No. Then what are you going to do? Renounce. Then tell me, to whom are you renouncing? Check, over. Or you authorize the renouncing and you give it to him, then they will themselves take it and sell to the market. In fact, you can sell the right. And once the right is sold, he can automatically go and apply for it online and finish it by giving the reference. That's all. Okay. So it is as simple as that. Who is renounce? The person to whom the offer. Are we not jumping the topic here? Are we not going to rights issue, which is going to come a little later? Shall we wait patiently and now concentrate only on transfer and transmission? Kavita Chandak, wait. I'll be teaching rights issue in detail in a short while. At that time, this question, who is renounced, will be answered. Okay. Is 90 days calculated from date of delivery of instrument of transfer? Swati ji, look at this diagram. Where does this arrow begin? Where does this arrow begin? From the date of delivery of instrument of transfer. Yes. 90 days is to be counted from the date of delivery of instrument of transfer. So, the 60 days from the date of refusal to register, notice of refusal, or 90 days from the date of deposit of delivery of instrument of transfer. Okay, got it? The diagram, I hope, clarifies that. This diagram is clear. That is why I have given the diagram. Okay, from the diagram, you will be able to see that the appeal should be made by tribunal within 90 days. Of course, here I have not mentioned within 60 days of date of delivery. But I thought the arrow mark beginning from here would make it simple. See, these notes are meant to supplement your institute material. I'm trying to put it in simple form. So I'm trying to, if I put too much, it will be cramped. So you should also use your intelligence and say, I got it, I understand. Idea is, if you're able to see this picture, you should be able to remember it in the exam and write and solve the problem. That is all. I didn't understand. If the private company has denied the transfer, what will change if the transferor will appeal to the tribunal? If the company has denied. So what will be the use of appealing to the tribunal? That's a good question. I will send a letter to the tribunal and saying, Mr. Vedant Dwara honestly feels that you are useless. If the company has refused to register the transfer, what is the use of appealing to you? What can you do as a tribunal? It's a good question, Vedantji, but allow me to give me a little time to move through the slide. We will see what powers the tribunal has in this case. See, at this stage where the story is, we have only made an appeal to the tribunal. Let us see what are the powers of the tribunal when there is a refusal or to register transfer. The tribunal has certain powers. Otherwise, why will they give an appeal provision? If the tribunal can do, what will change if the transferor will appeal to the tribunal? As the company has denied, what will be the use of appealing to tribunal? It's a good question, but I humbly suggest that you have to patiently wait for me to give you the powers of the tribunal in this case, what they can do. Let us see. Even I am little suspenseful, like Vedant Vora. What will happen? What is the use? After all, the company has refused to register the transfer. What can the tribunal do? Let us see. Yes. The tribunal will, while dealing with the appeal, this is the power of the tribunal while dealing with an appeal against refusal to register or not even giving notice of refusal. Doing nothing. Either way, you have made an appeal under section 58. Either a private against a private company or a public company, whatever. The tribunal has the power. The tribunal has the power to, Mr. Muhammad Aslam, don't put comments like this without explaining why you are putting it. Please, you are disturbing my class. Sir, the name of class is business laws. What do you mean by this? Why have you put this comment into this query pad? Please, Aslam, you have to be careful in future while dealing with query pad. You are, because I am in the middle of teaching a complicated topic. Suddenly you have put the comment, sir, the name of class is business laws. Why have you put it here? Please explain why you are putting this comment here. You understand? Don't suddenly jump in and put some comment. Or if you're going to put a comment, kindly tell why you are putting it. Because I am not able to understand why you are putting. Maybe it is my foolishness and inability to understand what you are putting. Okay, don't put this. Why did you put it? Because you are wasting everybody's time by making me comment about it and all. Also, do not put comment about your private life. One more comment from you that you are studying till 2 a.m. and all, I don't want to see. I know perfectly that you are studying till 2 a.m. in the morning. Baba, I appreciate you. I worship you. You are God. But enough, bus. Okay, no more. You ask me genuine doubt on the subject, I will answer. About your personal life, because I've learned it. I'm aware that, every day you study till 2 a.m. You write down everything that I am telling. I know all that. You know what? I appreciate you. But if you keep on putting it in the query pad, it becomes a waste of time for everybody. What do you say? And especially me, I'm getting distracted by your comments. Sorry. And I've also seen your sorry, sir. Keep it remitted. See, for example, Vedant Dwara has asked a nice question. Agreed. It's a question, but now his answer is coming. When his answer is coming, why are you interrupting? Okay. So Vedantji, are you ready? What is the power of the tribunal? First, the tribunal may dismiss the appeal itself because they might say, hey, the company's refusal is valid. Their refusal is valid. What they did is correct. Get out. For example, there might be some clerical error or some mistake. Whatever. They said, whatever the company has done, they have done it correctly. You rectify it and present it again and you make something like that. Dismiss the appeal. Or direct that the transfer or transmission shall be registered by the company. Are you able to understand? Now, Vedant Jivara, are you able to understand this? The tribunal has the power to direct that the transfer or transmission shall be registered. Then the company shall comply with the order within 10 days of receipt thereof. Are you able to understand? Shall. The word used here is shall comply. This is the power of the tribunal. Also, the tribunal, while hearing this, can direct the rectification of the register. Meaning what? They can, suppose the name of the member is entered wrongly or the name of the member is not entered, then they can direct that the member's register should be rectified. Okay. Also, because of this, the shareholder might have suffered any loss, right? The transferee or the transferor for that matter. So the company can direct, the tribunal can direct the company to pay damages, if any, sustained by any party aggrieved. This is the power of the tribunal. So now your question is answered, sir. What will be the use of appealing to tribunal? Is there any use? What do you think, Vedant? Okay. So that is the answer. So that is the idea. Any refusal register will be punished by the tribunal. So this section gives, shall we say, confidence to the investors this section gives confidence to the investors that that in case they transfer or buy or sell shares, their rights will be protected, and unscrupulous companies cannot play games with them. This is something that is very, very important. Okay. So this is the thing. Good. Yeah. Now Vedant is coming out with another question. It means that company by their decision decide not to transfer. Then as the company has the right, but the tribunal can ask them on basis of certain grounds to allow. Correct. So this is being done by the tribunal. See, the tribunal is like a court. The tribunal is like a court, but not a court, because court will operate under the high courts and the Supreme Court under the CPC. Tribunal doesn't operate under that. Tribunal comes under the Ministry of Law and Justice, but it operates under the quasi-judicial body. It is a quasi-judicial body. It is not a court, but it has certain powers. Later on, when you come to final, you will learn about the tribunal, how it operates, members and all. But as of now, what you should know is it's like a court. If you go to the tribunal, you can get relief. Are you able to understand? So whatever orders are passed by tribunal have to be complied by the company. If they do not comply, the next question, in case the company does not register, then that they can take action for contempt. The tribunal can penalize them for not obeying their orders. So normally when the tribunal is, but within 10 days you can do one thing. The company, this is only the tribunal. You can go and appeal to the National Company Law Appellate Tribunal in case you have a point, but that only you are given 10 days to comply. Beyond 10 days, if you have done nothing, you are violating the order. Absolutely. The tribunal's power remains the same in private and public. Both. Correct. The appeal is deemed to be applied by a member who suffered. See, the appeal is made by the transferee. Clearly, we have mentioned in both the slides. The appeal is made by the transferee. He is not yet a member. He has to become a member. He has not become a member because his transfer has not been registered. So the aggrieved party is the transferee. To use your language, the person who suffered, not the member. Don't say member here, because technically Muhammad Aslam, he is not a member. He is still the transferee. Okay. So, but he is the aggrieved party. Therefore, he is the person entitled to make the appeal. Okay. Fantastic. This is a very interesting area and possibly the important area. It is a nice crunchy area where there are a lot of deadlines, 60 days, 90 days. So they can even ask you a MCQ on this, or they can ask you a practical question, or they can ask you even a descriptive questions. For example, so-and-so applied for the private company. Advise him on what is the concept, what he can do, and what are the powers of the tribunal. You would write this, 2 slides. Okay. Thank you. No problem. Thank you, Mr. Aslam, for what you have stated. Moving on. It's a long time since I taught intermediate. Only final I have taught in the recent. I think about 9 months since I taught intermediate. 9 months or 7 months since I taught intermediate. That is why I'm still not comfortably with the questions that are coming. I do realize that, you are intermediate students. Therefore, you may have some gaps in your knowledge. So some of the things which we assume you will know may not be known to you in intermediate. So I will give, wherever there is a thing, I will fill it. Also, today morning, I was, okay, let's finish this and then I will talk. Penalty for contravention of order under section 58. If you do not obey the order of the tribunal, then the person contravening the order, say MD, director, whoever it is, imprisonment, 1 year or 3 years maximum, and fine 1 to 5 lakhs straight away. Okay. Can tribunal impose fine on transferee if in decision of tribunal they come? No, sir. No. See, he made an appeal. He lost it. Dismissed the appeal. That's all. Okay. No. As it is, under the current law, he cannot do it. Okay. So that is how it is. So that is what. Because what happens now when I teach final level students, their depth of knowledge will be slightly higher. So they will ask different ones. Here, I know you are not deep. Some of you are highly knowledgeable. Some of you are, I think. Today morning, I was addressing a group of company secretary students, morning class. I was teaching them accounting. And Accounting for company secretary is all very basic. Don't expect something like what you are studying. What you are studying is all 19th floor. I'll be teaching them at ground floor and on first floor level, I'll be teaching them. Okay, even that they'll be struggling to understand. Okay, but the point I'm trying to make is I was telling them one important thing. As a professional, you have to improve your vocabulary. What is vocabulary? The number of words that you know, not just words, but professional words, technical terms. You should be able to give brief and clear and precise definitions for technical terms. So whenever a technical term is used, you should know what it means. And you should know its precise and technical meaning. You should not talk like a layperson. See, I was giving the example of medical profession. For example, suppose the two doctors are talking and they say myocardial infarction. That's all. If I say myocardial infarction, then about 15 pages of medical knowledge will be remembered by one man and the other man. Both will remember because they have studied it. That is why they are experts. They are called doctors. Similarly, once you become a chartered accountant, a single word should be able to trigger a whole set of connected thoughts and meanings and all. So that level knowledge is expected by the institute from a final level student. Inter-level student, what we expect is you have to acquire it now. Later on, you will be able to apply it. But right now, you have to acquire that vocabulary. So whatever you learn now, meanings of words, precisely try to remember it. I am doing my best to give precise definitions. For example, in the morning, I was asking them, today we are going to see that topic also today. See, I'll give one example of technical. For example, what is the meaning of a debenture? What is a debenture? Okay, now this is a technical term. Debenture is a technical term. Finance people are supposed to know what it means. So if I am asking you to give a term debenture and ask you what it is, later on we'll be talking about debentures in my next class. If I ask you what is a debenture, you should be able to give a precise single line, accurate, precise, concise term. Means at least you should be able to say it is an instrument evidencing a debt. This is the word. So suppose you use long-winded description of debenture. No, it is an instrument evidencing a debt. Okay, like that. So I think that preciseness is something, which means you should be able to use language like a surgeon uses a scalpel. The type of how you choose the words, okay, you should be able to use language like a surgeon uses the scalpel. Because when I'm cutting into the skin, subcutaneous layer, epidermis, then slowly I'm going deeper and deeper into the body. I have to use lesser and I can't use thick scalpel. Thinner and thinner scalpels are used. And I may be operating at the vein level. At that level, it is a totally different scalpel. Language is like that. You have to be so precise when you're using it. So one important thing that you have to start improving over the next 6 months to 9 months is your ability to use language. If you're going to write the exam in English medium, then my suggestion, improve it fast. Because that could cost you marks in the exam, especially in papers like law. Okay, so be careful is the point. Okay, correct. Exactly. See, this is the definition given in the Companies Act. This is what I mean technical. So whenever a word is used, you should know the correct technical term for it and technical descriptive meaning of it for as many words as possible. Suppose you have accumulated a vocabulary of 1,000 to 2,000 technical terms and you know their meaning precisely, you are ready to become a successful chartered accountant. This is one secret I'm letting you in. Okay. So, see, compare the definition given by Mohammed with Alok. Alok says instrument issued by company to get debt. See, now you are using a slightly lesser language. Slightly. So, try to make it more professional is all I'm saying. Slightly. I'm not commenting about your English. I'm saying if it can be a little more precise, a little more thing, the chances are you will get more marks in the examination. Suppose you're writing in Hindi medium, no problem. Even there, Hindi is a language that has to be used with scalpel precision. Exactly you should use. The exact terminologies you should use so that there will be no doubt that you know the subject. Okay. I don't know because my vocabulary in Hindi is very zero. So I cannot. But so you should know the exact word. For example, I teach entrepreneurs across Tamil Nadu. I address entrepreneurs on finance topics. And I use Tamil. I speak in Tamil to them. And I use precise words in Tamil for technical terms. In Tamil, precise words, which they understand. So that I will make no difference. Wherever possible, I use Tamil words to describe that what I am trying to tell them. But I will use precise words. Words that have no ambiguity. Words that cannot be confused. Even if they confuse me, I will take them back and show them why my definition is precise and descriptive of what we are talking about. I know maybe I'm wasting your time in giving this comment, but think about it. Okay, is the point. Now, all I am saying, Alokji, is be more precise in your language. That's all. There is no end to perfection. Rabindranath Tagore, in his famous Gitanjali poem, says, where tireless striving stretches its arms towards perfection. In Gitanjali, one of the famous poems, where the mind is without fear, he says, where tireless striving stretches its arms towards perfection. It cannot touch perfection. You keep on striving towards perfection. That process you have to do more and more deeply. Far be from me any intention to correct English for you or anybody. But saying be precise. Okay, try to use precise language. Sorry for any inconvenience caused to anybody, but try to be more precise. Wonderful, beautiful. Anyway, I've introduced debentures because next class I will be covering debentures anyway in detail. I'm saying. Okay. Now here we talk about 59 talks about rectification of register of members. Rectification of register of members. Friends, 58 talks about refusal to register, transfer or transmission. 58 talks about rectification of register of members. What are the grounds? When can I make an appeal under section 59 for rectification? The name of any person is without sufficient cause A. entered in the register of members of a company, or after having been entered in the register, omitted therefrom. Or omitted means it is not there. So the directors of the company are falsifying or making wrong entries in the register. They are entering the name of a person who is not a member. They are making him a member, putting his name there. Or after having been entered in the register, he is omitted. Okay. This is usually done in family-owned businesses where all sorts of nonsense will happen. Later on, you'll be studying operation and mismanagement. These are all grounds for mismanagement and operation, where they falsify the register of members, enter names without proof and all. Whatever it is, there is the register of members of the company is having an error. Now, this section gives you the power to make an appeal for rectifying the register of members. Similarly, second point, there is a, this is second. Sorry about that. I don't know how that number changed. It's a problem. Okay. Now, so second point is default or unnecessary delay in entering in the register, the fact of any person having become or ceased to be a member. Okay. Please note, you might ask me, sir, what is the difference between this and that? After all, here also, they are delaying the transfer, registration of the transfer. Correct. 58 talks about registering the transfer itself. Under 58, they are not acknowledging the transfer itself. Here, they are defaulting or unnecessary delay in updating the register. Then, see, they have said your transfer is registered, but my name is not appearing in the register of members. So, or my already ceased to be a member, but my name still continues to be there. You are not updating it. How many ever times I tell you, you are not doing it. There's a default or unnecessary delay. Then you can go to the tribunal. Who can appeal? The person aggrieved. Under 58, only transferee can appeal. Here, the person who is aggrieved can appeal. Any member of the company or the company itself can appeal. Wow, this needs a lot of thinking. The company itself can appeal. How is the boss? What do you mean, yeah? This is something very powerful. If you are thinking about something else, Stop thinking about that and concentrate on what I'm saying, because this is a very powerful concept. Again, you will revisit it when you come to management and administration. You have to ask yourself a very powerful question. Who is the company? Not what is the company. What is the company? Artificial legal entity is a separate legal entity, perpetual succession, blah, blah, blah. Who is the company? Company is a majority of its shareholders passing a resolution at a validly constituted, convened, constituted and conducted meeting. Company is a majority of its members where at a meeting passing a resolution. Okay. Now that body feels that the directors have done something wrong. So they hold a meeting. Later on, when we come to management administration, we will talk about EGM, Extraordinary General Meeting, conducted by the members. The requisitioned meeting is there. So the board of directors is doing all nonsense. They are falsifying the register and all. So the members are majority group now. They are disgusted. So what they do, they call for a meeting. The board is not calling a meeting of the company. So they themselves have an EGM. At that EGM, one of the resolution they passes, make an appeal to the tribunal for rectification of the register of members. So they go to the tribunal like that. In this situation, remember, the company is in a mess. It's possibly this type of a Section 59 action would be combined with an appeal or application for relief from mismanagement or oppression. Later you will study it in final. So by the time you come to oppression or mismanagement, you will forget 59. But remember, 59 will be linked there. One of the things that they will do is kindly rectify the register under Section 59. They will say. So the company itself can pass a resolution. Any member, any person aggrieved. Aggrieved person means who is affected. Aggrieved means grief means sorrow. Aggrieved means he has been caused some sorrow. He has been caused some difficulty. Such a person is called aggrieved person. What is the difficulty? His name has been entered without sufficient cause, or his name having been entered was omitted, or there is an unnecessary delay. So that is the grief. So he is the aggrieved person. Any person. See, Mr. A is not a member, but his name is entered in the register of members. He is an aggrieved person. He can go and tell. Okay. So this is called aggrieved. Correct. Appeal to whom? The Indian members who are Indians can appeal to the tribunal. Foreign members can appeal to a competent court outside India specified by central government. We have a treaty with most all the countries where there is the equivalent body where they can appeal. Okay. And they will appeal to that body in case there are members who are outside of India. Okay. Foreign members. Now, in this under 59 also, tribunal has similar powers. Like it can dismiss the appeal and say, nonsense, everything is correct. We have verified the register of members. Board is maintaining it correctly, no mistake. Maybe they will ask a company secretary or a chartered accountant to conduct a investigation and report. They may audit and report to them and say that if there's something, everything is fine. Then no, dismiss the appeal. Or if the board of directors has acted badly, it has done something fraudulent or intentional, then they will direct that the transfer or transmission shall be registered by the company within 10 days of receipt. Or they can direct the rectification of the register or even the records of a depository. Okay. Direct the company to pay damages, if any, sustained by any party who is aggrieved. Okay. Got it? Okay, just for the record, there is a test of vocabulary. You can take that. Okay, there's a powerful test of vocabulary online. You can go and take that. Point is, how many words do you know? That is what it will be tested. Okay, the last time I took the test was about 6 years ago. Last time I took the test was 6 years ago. I'm not boasting. I'm not trying to boast. I'm not trying to say, like, I'm also allowed to make comments like Ahmad Aslam about myself, right? But not in the query pad to you directly. And I'm saying what I do, I can keep on talking about, right? One thing is my vocabulary, even I was surprised. 1,25,000 words. 1,25,000 English words. Okay, I'm not boasting. I'm saying it didn't happen in 1 month or 2 months. It happened from the age of 9. From the age of 9, I have been reading books. I have been reading English. I have been enjoying the English language. Whenever I come across a new word, I look up the dictionary and learn it. Not only will I learn a new word, I will use that new word. Like Muhammad Aslam will confirm immediately that he also does it. So, like Muhammad Aslam, I also, whenever I come across a new word, immediately I will use it in my sentences. I will write. Thereby, you can improve your vocabulary. So, you might ask me, Mr. Srikanth, or you may not even say Mr. Srikanth, you are here to teach me law. Why are you wasting? In fact, one student even rudely once put, stop wasting our time by all this nonsense and continue with the class. Like that one student put. I remember. Okay. See, imagine such a person. Why am I giving this as not only as a Buddha, but also as a person in your own interest, I'm telling. If you start working, see, even now it's not too late. If you start working now, your vocabulary will improve. And you'll be able to use these words in sentences, and you'll be seen as because again and again, I'm making this point. Today morning, I made it to company secretaries. Now I'm making it to CA inter students. Improve your vocabulary. You will be respected as an expert only when you are able to use the language very powerfully. All the knowledge that you're acquiring on Ind AS, all the accuracy and perfection in your solving problems and all will be of no use if you are not able to express yourself precisely and accurately in the English language. I know some of you can solve Ind AS, accounting, cost accounting, taxation. You're all experts in that. Good. I'm very proud of you. But one more skill is needed, which is ability to express yourself precisely and accurately in the English language. Try to improve that. That is also a relevant skill. You can't avoid it. You can try to argue and say Hindi, national language and all, but don't avoid any language. Why only Hindi? Some of you may not know Hindi, but you may not know English also. Whoever you are, take it from a man who is going to complete 56 years and enter his 57th year of life tomorrow. Take it from him that improving English is also as important as being an expert in taxation. Being an expert in taxation, I know tax well. I know accounting well. I'm an authority on Ind AS. Right, Bhaiya? We give you the mic and ask you to speak for half an hour. Can you speak for half an hour in clear, precise English and explain to us what it is all about? That is a skill that has to be developed. Please, along with knowledge. Okay, so I'm thanking you. Hello. So that was a nice way of putting it. Now, so now you know that tomorrow's birthday. Point I'm trying to make is, okay, give me a birthday gift. Promise that you will start improving your English, all of you. That is the birthday gift as a teacher I'm asking you. Promise yourself that you will improve your English starting tomorrow. Okay. How you will do it? Internet will have so many ways of doing. I don't have to tell you, go to Google, but start doing something. Whatever it is, when you go to Ind AS, will your English improve by then? Check it out. Okay, whatever it is. Okay. Good. Okay, let me see some questions. 58 and 59 have small tribunal. What is a small tribunal? What is a small tribunal, sir? Not able to understand the meaning of the term small tribunal. We enclad an NCLT 2 tribunal. So can you please tell me some basic... Sir, okay, that way. Oh, you mean by small tribunal. See, NCLT is the tribunal. It is a lower body. Okay. This appeal will lie to the tribunal. Suppose you are not happy with the order of the NCLT. Then against the order of the NCLT, you can go in appeal to the NCLAT. So, if upar hai, on top, the NCLT is here. If you are not happy with NCLT ka order, you go on appeal to the NCLAT. That's why it's called. If you are not happy with the orders given by the regional director or any other, wherever in the act they say appeal to the tribunal, that will come to the so-called small tribunal, as my friend Aslam calls it. Small tribunal, I don't know, it means NCLT, National Company Law Tribunal. In case you're not happy with the orders of the NCLT, then you can go in appeal against it to the NCLAT. Against the NCLAT, you can only go to the Supreme Court. If you are not happy with NCLAT order, then you have to go to the Supreme Court. Okay. Good. Thank you. Thank you for all your kind wishes. Okay. Good. Oh, this reading till 2 a.m. When is this gentleman going to stop telling? Sir, you read till 2 a.m. or not? Read 10 pages of some book which has nothing to do with CA, which will improve your English. Thank you, sir. Thank you, Alokji. Thank you very much. Okay, English. Good. Excellent. Nice. I'm happy that I made this point because I keep on making this point to students, even at the cost of irritating them a little. I do it in their own interest. What do you say? Many things, in our life, we feel unhappy if somebody tells us, but it is needed by us, right? That's why we keep telling. Even though it is difficult, it is needed. Tribunal may also direct rectification of members or the records of depository when the records where the transfer of securities is in contravention of these laws. Securities Contract Regulation Act, SEBI, Companies Act, or any other law. See, I'll give you one example. Under the SEBI Act, which you'll study in final, and this is only given to explain. Don't go too deep into it. When there will be a contravention of SEBI, I can tell you. That is, SEBI has something called takeover code. Under the takeover code, if somebody wants to take over another company, there is an elaborate disclosure mechanism under the SEBI guideline. If that is violated, then the company has the right to refuse. Are you to understand? Sometimes it may be correct, sometimes it may be wrong. In those cases also, an appeal can be made to the tribunal. In those days, CLB. In those days, High Court. See, the power of the tribunal, once upon a time, was handled by the jurisdictional High Court. For example, if the company is a Tamil Nadu company, Madras High Court. If the company is a Karnataka company, not Bangalore High Court, it's called Karnataka High Court. I don't know why. It's not called Bangalore High Court, it's called Karnataka High Court. Actually, I know the reason why, because Madras was a presidency. That's why you have Calcutta, Madras, Mumbai, and Delhi are High Courts. Whereas the rest of it will have the state name only. Okay. Because they were not presidency towns. So Madras was a presidency. So we have Madras High Court. Okay. Which has not become Chennai High Court. As of now, even today, it is only Madras High Court. Does not become Chennai High Court. Okay. If we check it out. Kolkata High Court is still Kolkata High Court. Now, so the company or the security holder, the depository or depository participant can apply. SEBI itself can apply. Where there is a violation of SEBI norms and there is something happening, they can do it. Okay. So this is how you have to understand. Thank you, Kanchan Kumari ji, for your kind words, and thank you for your kind wishes. Good. Okay. Provisions of this section shall not restrict the right of a holder of security to transfer such security, and any person acquiring such securities shall be entitled to voting rights unless the voting rights have been suspended by a order of the tribunal. See, suppose a person is already an owner of shares, because an appeal is pending or appeal is there, the rights of the holder of security to transfer such securities and that acquiring person will be entitled to voting rights unless the voting rights have been suspended by an order of the tribunal. What could happen is, my name should be entered in the register. Instead, somebody's name is entered. Now, if I want to protect myself, what I should do, I should go to the tribunal and say, please, kindly direct rectification. In the meantime, please put a ban or suspension order on the voting rights, so that during this decision given, nobody should be able to exercise voting right on those shares. If such an application is made and granted, then voting rights cannot be exercised by the transferee. See, all this will happen when some groups are fighting with each other and the controlling group is doing some nonsense and entering people as members. At that time, the other group will be aggrieved. Now, only they will go under 59 and they will want rectification. In the meantime, they will also go for a interim application or prayer that kindly see to it that the voting rights are suspended. If that is the case, then voting rights. Okay. So to understand this, you should appreciate that this will apply to transfer of shares by a person whose name has been omitted from the register. because he's still a holder. Now he is the holder of the securities. So he can transfer, and the buyer thereof will be entitled to voting rights. But in the meantime, if voting rights have been suspended, then that suspension means voting rights cannot be exercised till such time this is decided. Right? Now we have finished refusal to register transfer of shares, a very interesting thing. And I also quickly acknowledge Dhyanesh English need for a break. I thank every one of you who have wished me happy birthday tomorrow in advance. And I look forward. I thank you all. Dhyanesh says there should be a break. Agreed. It's exactly now 7:30 by my watch and my mobile phone. Therefore, we'll have a small break for 5 minutes to 10 minutes, maximum 5 to 10 minutes. Okay. Sir, break, sir. Welcome back from your well-deserved break. So we have completed the topic of refusal to register transfer of shares. And now we move on to alteration of share capital, meaning increase, decrease, etc., etc. So basically, Section 61 talks about alteration of share capital. A limited company may, if so authorized by its articles, alter its memorandum to increase its authorized share capital by such amount as it thinks fit, expedient. So, say limited company, they mean both public and private. So, both of them can increase the authorized capital. So, also consolidate and divide all or any of its share capital into shares of a larger amount. For example, the authorized share capital of a company is divided into, the share capital of a company is divided into, say, 1 lakh shares of rupees 10 each. Now they can, that means what? 1 lakh shares of rupees 10 each. Now they can consolidate it. Means they can consolidate and they can again divide into 100 rupees share, per share 100. 1,000 shares of 1 lakh shares of rupees 10 each can now become 1,000 shares of rupees 100 each. Okay, whatever. Now, so they can consolidate. They will combine 10 shares into 100 share. 1 share of 100 rupees each. Same way, they can subdivide also into shares of a smaller amount. So B and D can be understood together. They can subdivide its shares. In my experience, I have seen only subdivision more than consolidation. I have rarely seen companies consolidate. Meaning, I have not seen a 10 rupee share combining 10 rupee shares combining to become 100 rupee share. But I have seen a lot of examples where one 10 rupee share will be subdivided into 10 1 rupee shares. One classic example is Infosys. Infosys share was at one time being quoted at 9,000, 10,000 rupees. One share. So what they did, they decided one share nominal value was 10 rupees. So they said we'll subdivide it into 10 shares of 1 rupee each. So one 7,000 rupee or say 8,000 rupee share divided by 10 became 800 or 700. Why do we do it? One of the reasons why we subdivide is because the shareholding public, they feel bad, if they have to spend 7,000 for one share. So if I have a budget of, a poor man like me, I have a budget of say 25,000 rupees. Maximum I can buy 3 shares, not more than that. If it is 7,000 bucks. But if it is 700, I can buy more. So that, and the number of shares in the market also increases. So therefore, subdivision happens. Today, there is a subdivision of many shares. For example, Infosys 1 share 1 rupee. Like that, you can check out many listed companies having high value shares. Their nominal value will be less than 10 rupees. It is allowed. You can subdivide and you can subdivide. Similarly, you can convert all or any of fully paid up shares into stock and reconvert stock into fully paid up shares. We already saw what is stock because we said stock again is nothing but I don't consolidate and divide. Shares remain 10 rupee shares only. Per share nominal value is 10 rupee. But for the purpose of trading, we convert that 10 shares of 10 rupees each into one stock. Or you can reconvert stock into fully paid up shares of any denomination. Okay. Again, for the record and humble request, don't get angry. Rarely, impossible. I have never seen shares being converted into stock being converted to shares. I've rarely seen a company issue stock and all. Simply, it is there in the law. If you want to know it, know it. If you don't go too deep into it and waste your time. Simply, they can cancel shares not taken up and diminish share capital to that extent. For example, your authorized capital is 50 crore shares. 50 crore shares of whatever. So make it 5 crore shares. So and so. Now you don't need 5 crore shares. So you can diminish the share capital. Diminish means reduce. Diminish means reduce. So you can reduce the authorized share capital by cancelling shares not taken up. Shares which are not issued only can be cancelled. You cannot diminish share capital which is already subscribed and paid up. Okay, only untaken up shares, only unsubscribed shares, or even for that matter, unissued shares only can be cancelled. Again, E, rare. I have never seen a company cancel. Once they have got the authorized capital, they will not. Why they will do it? Maybe because authorized capital is huge and the fee they are paying is high. They may want to reduce it to, don't confuse with reduction. This is diminution, where you cancel shares and diminish the share capital. Diminution means authorized capital is coming down. Later on, we'll be seeing reduction. Reduction means paid up capital itself will be reduced. Please understand the basic difference. Please, yaad rakh dijiye, please keep it in your mind. Diminishing means diminution, or diminishing means authorized capital is reduced, unissued capital. Whereas reduction means paid up capital itself will be reduced. Okay, this is a basic difference. Okay, correct. As Piyush Chodia correctly says, once we subdue it. So in this A, B, C, D, E, I have seen and done only A and D more. B, C, E, I have never seen, I have never heard. But A and D, many times, many companies have subdivided, and increasing authorized capital happens every day. Every year, my own clients, I do 10 or 15 cases where we increase. Because they are increasing their paid up capital, they want to use authorized capital is not there, we immediately increase. Or they want to allot bonus shares. Authorized capital, it should be there. No, only then I can allot bonus shares. So we'll increase. This happens regularly. For all this, okay, thing. And remember, E part, the cancellation of shares shall not be deemed to be a reduction of share capital. Reduction means paid up capital should be reduced. Already money has been received and you're writing it off. Only then it is called reduction. When you will do it, how you will do it, we'll see today. Okay. Moving on. We move on to rights issue or preempt. And one more thing, please remember, anything that you do in section 61, anything that you do in section 61 should be authorized by articles 1. And it will involve an alteration of memorandum. It will involve an alteration of memorandum. What is required to be done for alteration of memorandum? Any alteration memorandum requires, fill in the blanks. Any alteration in the memorandum requires, fill in the blanks. Any alteration in the memorandum requires, fill in the blanks. Question. Any alteration in the memorandum requires what? Exactly. Beautifully said. SR. Special resolution. Absolutely correct. Okay. Exactly. So all these matters require alteration of memorandum, which involves the passing a special resolution, MGT 14. Within 30 days, you have to file it. We move on to rights issue or preemptive right of equity shareholders. We already saw that. Beautiful. So nice. All of you are giving the correct answer. Suppose this comes as a multiple choice question, so you're hitting on the net. You're hitting the nail on the head. Beautiful. We saw that application for shares is an offer and allotment is acceptance. No doubt, right? So whenever the company issues a prospectus, it is making an invitation to trade. Application is an offer. Allotment is acceptance. But in the rights issue, it is reverse. The company makes a rights offer to the shareholders. Why they will make it, we will see it. But the company is making an offer which is accepted by the shareholder or not. Normally, an offer can be accepted only by the person to whom it is made. You go to a girl and tell her, I love you. Or if a girl comes and tells you, I love you, you cannot tell, sorry, madam, I cannot accept your offer. I will pass it on to somebody else. No. The offer should be accepted by the person to whom it is made. This is basic contract law. But rights offer, there is an exception. There is a right to assign or transfer the right to someone else. This right is called right of renunciation. So now your question is answered. So in rights offer, there is a right to assign or transfer the right to someone else. This right is called right of renunciation. Renunciation or renounce means to give up. So when I have the offer to buy when the company has made an offer to me to buy the share, instead of accepting the offer, I give up that right to somebody else. I give up that right in favor of somebody else. This is called renunciation. To renounce means to give up. Here the offeree renounces his right to subscribe for shares. Those of you who are expert in finance by now, you would have known that this right itself can be purchased or sold. This right itself can be purchased or sold. Okay. Just for your general information, in 2020, what happened? Reliance came out with a rights offer. Okay. I already mentioned to you that it was a partially paid share. Do you remember when we spoke about partially paid shares, unpaid and all that? I told you Reliance had come. I even gave an example of a partly paid share. That was actually a rights offer. Meaning, suppose you are already an existing shareholder of Reliance, you will get, if you are holding so many shares, you will get one right share like that. They gave a rights offer. Okay. So, the rights offer also carried a right of renunciation. So, within the due date, suppose you did not want to accept the offer, you could transfer that right to somebody. And there was a market for that right. Traded, that right was traded for a short period. Till the date of, the last date for renouncing or accepting, till that date, there was a trading in the rights. I am giving you rough numbers. If you don't expect me to be accurate and don't correct me also, then the correct numbers you can always check out from Google. 1,233 or something, they made the rights offer. Or maybe in that range. At that time, the Reliance share was quoting at 1,400 odd. Was quoting for 1,400 and odd. Okay, now, so.
Yes, sir.
Varla. This is not the time. So, Reliance, so what happened for your information? So happened I had some shares of Reliance and I got a rights offer. So that right I sold. That right was quoting at 300 rupees. Okay, that right was quoting at 300 rupees. And at that time, Reliance share was quoting at something 1,300 or 400. Now I found that if I sell my right and I purchase at the current market price, I still make money. I made more money than buying the rights. I think the right price was higher than the rights offer plus buying the share in the market today, which was low. Something like that. I seriously forget the logic of what was happening there. And we found that you could actually get the share about 36 or 40 rupees less than the rights price. I have it in my notebook somewhere. I'll have to go and verify. I made that calculation and I realized that if I sell the right and I buy the share in the market at that price, okay, I actually make money because I buy it at 1,400 something, reduce 300. It becomes 1,100 and odd. Whereas the rights offer was made at 1,230 or 1,300, which means I actually got a better deal if I sold the right and purchased the share in the market at that price. There was a mismatch. That window was open only for about 2 to 3 days. Then the rights price went down and the Reliance price went up. Later it went on. And today, of course, you know what it is, 1,700. Point is, then I waited, then I got the benefit. Then I waited for the price of Reliance to go up sufficiently, sold it and came out. All I'm trying to tell you is the right itself has a value. When you're renouncing it, in a way, you are actually selling that right. You can actually get money for that. This happened in the case of Reliance. Well-known rights offer in the recent past is Reliance. I'm not able to give any other. I'm sure some of you would be well aware of other rights offers. But this is one right offer that I remember well. In fact, I was made that offer and I renounced that right, for which I got some 300 odd rupees. The market price was 1,400. I bought 1,400 minus 300 I'm getting now for the rights. That will give me 1,100, which will be my price for that share. Now, at that time, the rights offer was 1,300, which means I would have paid more. If I had bought the right share, I would have paid more. So that window of opportunity was there for me. The mistake I did later on realized was selling that share. when the price came to something like 1,500 or 1,600, I sold it. I booked the profit and I went. I should have kept quiet. That is the only regret I have. Because I would have got it at a lower price than the rights. Okay, is the point. Okay, good. 1,000. See, that's what all are brilliant people. Immediately you'll throw the answers at my face. Thank you. So the renouncer will get the price of their. Correct. As you all well aware, that the value of rights itself can be calculated also. And it can be, it is traded. So the renouncer will get the price of the right, which is what I got. Just for your information, I'm giving you. So, and why this rights issue is there at all? Because the reason is, see, if you are the shareholders of a company, the company has two classes of shareholders, majority and minority. Majority shareholders are having 80%, minority 20%. So the paid up capital of the company is 1 lakh. Out of that, 80,000 held by majority, 20,000 held by minority. Simple calculation, 1 lakh shares, 80,000 held by majority, 20,000 held by minority. Voting rights are 80:20. So if at the meeting 20 votes are there, there are 80,000 votes, near 20,000 votes. Now the company wants to go for a further issue. Whenever the company goes for a further issue, it can, if entire, suppose let us say another issue of shares for another 1 lakh. These fresh 1 lakh shares are entirely given to the majority group. Now what will happen? The majority group will have 1,80,000 as against minority group, which will still have only 20. So now they will be having 20,000 in 2 lakh shares. So the stake, the proportion of the minority will be diluted. If the majority keeps on doing it regularly for 5 years, the minority will become a minuscule minority. They will dilute the minority. Therefore, to prevent dilution of the minority, the law says, where at any time a company proposes to increase its subscribed capital by issue of further shares, such further shares shall be offered to the existing equity shareholders as nearly as circumstances admit in proportion to the paid up share capital on those shares. So now, if you follow 62, what should you do? Whenever, see this additional 1 lakh you issued now. Now you can't allot it completely. You cannot offer it to the majority. You have to offer it to all the shareholders, to the existing shareholders in proportion as nearly as circumstances admit, because I'm giving an easy example where everything is dividing correctly, but normally it may not be. So if there are odd shares, money can be paid, or you can round it off in such a way that you get exact number. Okay. So as nearly as circumstances admit in proportion to the paid up share capital. So the further 1 lakh shares, out of that, 20,000 should be offered to the minority. 80,000 will be offered to the majority. Now, if the minority wants to protect their situation, if they want to maintain their proportion of 20,000, they have to apply for these new shares. Suppose they don't have money, they don't want to invest, then they can give these shares to some friends so that the minority will still be protected. Their share will be protected. This is the, shall we say, principle operating in section 62. Earlier it was 81. This is the principle operating. But today it is not like that. Rights is just thing. But the rule is that if a company wants to make a fresh or further issue of shares, that further shares shall be first offered to the existing equity shareholders in proportion to the paid up share capital on the shares. Such offer shall be made by a notice and shall remain open for a specified period, not less than 15 days, or such lesser number of days as may be prescribed, and not exceeding 30 days. So the section talks about 15 days. So the rights offer should be remain open for a minimum period of 15 or lesser number of days as may be prescribed. Now, see, please note the red words I have given in the bottom. If you do your institute material may have something else, I don't know. Please read what I have written. The CG has been empowered by the Companies Amendment Act 2020 with effect from 22/1/21 to prescribe a lesser period of acceptance of rights offer. CG has, this was amendment C, or such lesser number of days as may be prescribed, was an amendment which came in 21. By that amendment, the CG has prescribed 7 days wide rule 12A, which is effective from 1/4/21. So if you still have a doubt, is it 15 days or 7 days, 15 days or 7 days, don't run around like a headless chicken. It is 7 days. Okay, the act was amended, CG has been empowered, central government has accordingly prescribed, Ministry of Corporate Affairs has accordingly prescribed 7 days wide rule 12A. So though the act contains 15 days, by virtue of this ability to prescribe, it has been prescribed as 7 days. So the correct answer is 7 days. Are you clear, my dear friends? In spite of this, somebody is going to put a note saying, sir, in Institute Board of Studies material, it says 15 days. Or is it 15 or 7 like that? Don't put 7. Unless the Board of Studies material is now amended, then you will have the right one. So the Act uses the word 15, but it has been amended to 7. Got it? Okay. Now, bonus share will take the character of the original share, so bonus to DVR will get. Rights issued at all price in the value in share. Correct. Rights share, in my example, when the rights issue was made, you yourself have pointed out that it was made at 1257. When that issue was made at 1257 offer, Reliance price was 1400 and odd. 1400 and odd. But the rights was trading at 300 rupees. So that when I reduce the 300 it became 1100, which is below the rights price. You do the number crunching, you will understand. On the day when I got the rights offer, Reliance quoting in the market that 1400 plus. My right is 350, 360 value. I could sell it for 360. So immediately I sold it at 360 means I will get 360, which is one side credit. On the other hand, I have to pay 1400. But net how much I will pay? Net of rights offer, how much I will pay? 1100 only now. So that is below the rights price now. So if you have understood it, great. If you have not understood it, what to do? Okay. Where 90% of the members of a private company consent in writing or by electronic mode, the offer may remain open for lesser periods than stated above. This is applicable only for private company. That too, 90% of the members should consent in writing or by electronic mode, not passing a rule. Unless the articles provide otherwise, the offer shall be deemed to include a right of renunciation. Unless the articles provide otherwise. So in case the article says rights offer does not have a right of renunciation, then no right of renunciation. If the articles are silent or they don't prescribe otherwise, the offer shall be deemed to include. Even if the offer document does not contain anything about right of renunciation, still it shall be deemed to include a right of renunciation. But normally, when they go for a rights offer, they will clearly mention, you have a right to renounce, etc. What is the procedure? Everything will be given. Okay. So this is rights offer. It is simple and straightforward. Nothing to get worried about. Now, I'll come to, I think we already done sweat equity, right? So I don't want to waste your time because we already saw at the time of discount, we saw sweat equity. Am I correct? So I'm not wasting your time here. Why I'm putting it here? Because I want to compare this with Esop. Okay. Now, exception, that is, rights offer shall be offered to the existing equity shareholders. Another exception, instead of offering it to the existing shareholders, you can give it to the employees under an employee stock option scheme, subject to special resolution and compliance with Rule 16. So, main body of Section 62 says, any further issue shall be offered to the existing shareholders, or it can be offered to the employees under employee stock option scheme, or it can be offered to any person for cash or for consideration other than cash, provided you pass a resolution, special resolution, and if it is for consideration other than cash, then there should be a valuation report by a registered valuer. So basically, my dear friends, A is the main. B and C are exceptions to A. A is the main. Any further issue should be offered to the existing shareholders in proportion. If you want to not to do that, then you can offer it to employees under Esop or to any person for cash or for consideration, provided you pass a special resolution. Got it? That's all. This is the B and C are basically exceptions. Another exception is 62 subsection 3. Debentures and loans may carry an option for conversion into shares. Debentures and loans may carry an option for conversion. Now, when there is an option to convert, nothing in this section shall apply to the increase of subscribed capital by the exercise of that option. See, already when I issued the debenture, I told that bugger, you can convert it into shares. That cannot become further issue. Rights issue, the 62 will not apply to that situation. Nothing in this section will apply to increase in subscribed capital due to the exercise of option to convert, either a loan or a conversion. But for this exception to operate, the terms should have been approved by a special resolution passed, I have highlighted it, before the issue of the debentures or raising of the loan. That is, you cannot issue debentures or loans and then make them convertible. Before the issue of debenture or raising the loan, you should pass a special resolution authorizing that these debentures or loans can be converted or will carry an option to convert. In those cases, when the lender or the debenture holders, they exercise the option to convert, then that will not amount to further issue and section 62 will not apply to that situation. So basically what we are discussing is exception to exception to, exception to rights issue, right? I explained to you, when the minority shareholders' interest is there, to prevent dilution of minority, any further shares have to be compulsorily offered to the existing shareholders. So there is a statutory or legal compulsion that preemptive means cannot be questioned. Preemptive, it is superior to everything. So this right of equity shareholders to be offered shares in proportion to their current holding is a superior right. It is a preemptive right. It cannot be violated. You have to make an offer to them first. Only if they renounce or they do not take it up, you can give it to somebody else. This is the meaning of preemptive right. Preemptive means superior, above everything. So this preemptive right is above all other claims. But even this because it is protecting the minority from being diluted. Therefore, they say it is a preemptive right. Preemptive means above everything. Superior right. Okay. Whenever I have explained a word which you are asking me to explain, and if you have understood it, madam, just put in a word there saying, I have understood, I feel happy. You are telling I don't understand, but you are not telling whether you have understood. If you have, please kindly document it. Correct. But then please note, A is the main rule, the preemptive right. B and C and 62(3) are all exception to that main rule. That preemptive right itself is subject to, suppose you don't want to give it to the existing shareholders, you can give it to Esop. So Esop is an exception. You can pass a special resolution and allot to any person for cash or for consideration other than cash. Okay. Or when there's a conversion of debenture or loan based on a special resolution passed before the issue, allowed. These are all exceptions. Similarly, where there is a debenture issued or loans obtained from a government, such government may consider it necessary in the public interest that those loans which circulate should be converted. Okay. When that happens, irrespective of whether the original terms of the issue is contained the conversion option or not, without bothering about that, okay, then such government may give direction for such conversion. This again is a kind of exception to the rights issue. See, government has already given you a loan or has taken your debentures, state or central. Now that government feels that, hey, better I will convert my debentures or loan into shares. Now, at the time of issue, before the issue, I have not passed a special resolution. Irrespective of whether the original terms of issue of debenture or raising of loans had a conversion option, the government has now got the right to give a direction for conversion. So, you receive a direction for conversion by the government. Now, the company may accept it or not. Is it acceptable to the company? Yes, it is acceptable to the company. Then no appeal, simply do what the government says. Allot those, convert those shares and allot. And automatically the authorized capital in the memorandum shall stand increased to the extent of the value of shares converted. No need to go to pass special resolution and all. The government order will be, after all, that government is passing an order direction, yeah. That direction will include increase in the authorized capital automatically. You will send a copy of the memorandum with the details to the ROC and finish it. Okay. I am not acceptable to the direction. I'm saying, I'm opposing the government. I'm saying, hey boss, no, you cannot convert. I don't want to convert into equity. Let it be debenture only. I will repay. Please give me time. I will repay. Whatever it is, I feel that I will repay. Don't convert it. I don't want you to become my shareholder. So this action is against the government now. Against that, whichever government. See, this government is not necessarily the Ministry of Corporate Affairs. It could be any ministry. I'll give you an example. Ministry of Industry is there. That Minister Udyog Bhavan. They may be having shares in a company. I mean, they may have lent money to a company, joint sector company. Now they might say, we want to convert. Now that company is also having a private party. Now he might say, no need for you. I don't want you getting into my board through shares. Your loan I will repay. We can revive ourselves. We will repay. Whatever it is, I am not acceptable to this direction given by the government. Then I have to make an appeal to the tribunal within 60 days. Then, if my lawyer is good, if my lawyer is intelligent, he will win the appeal. Great. Break a bottle of champagne, celebrate, run. If the government lawyer is intelligent, I will not say my lawyer is a fool. Government lawyer is more intelligent. He has won the appeal. Then the government has got the appeal dismissed. Then what do you have to do? Simply keep your mouth shut, go there, convert the share, authorized capital, and give the share certificate or deposit DP account credit to the company. Okay. This is a sequence of operations. I have given it in diagrammatic form so that it will be useful to you. Okay. So in determining the terms and conditions of conversion, the government shall have due regard to the financial position of the company, the terms of issue of debentures, or the rate of interest payable, and such other matters. So they will put all that in their order. In the direction, see, whenever the government takes a decision, whenever the government gives a decision, that decision should be clearly justified. The government should give a reasoning. Once they give the reasoning, you can question the reasoning before the tribunal. Finally, tribunal will decide and pass an order and it will be done. Okay. Okay. Thank you, Ms. Kavitaji, because just to know that you have understood, that's all. Thank you, Ms. Kavitaji. And as this section talks about equity shares only, can we assume that preference shares can be issued further without? Yeah. Why not? No need. This applies only to equity. Absolutely correct. Equity. Preference shares you can issue, keep on issuing whenever you want. You feel like issuing, issue. That's all. Enjoy. Go on and enjoy. You can. Your assumption is correct. Absolutely correct. We move on to another topic, which is issue of bonus shares. I think today I may not be able to cover reduction. That's okay. I will come near reduction and stop. Okay. Because reduction is again a concept. Without, if you're at this stage in the day, if you go and take up a concept, you might go a little mad. But then we'll come near 100th slide and we'll stop. Okay. As we know, minor can't buy or trade, but in case we have succession years, such company issue right share, then can such minor exist? See, my dear friend, minor is a legal proposition by itself. First of all, minor can't buy or trade in share. Why? Because minor cannot enter into a contract. Are you able to understand what I'm saying? Minor, see, remember why a minor cannot buy or trade in a share? Because the a contract entered into by a minor is void. acquisition of shares is entering into a contract with the company and other shareholders. Minor is prohibited. My contract entered by a minor is what? Therefore, minor cannot buy or trade in a share. So, but suppose by way of succession he can come, but obviously he will not be holding it, Baba. There will be something called minor's estate. You understand? The minute a minor comes in, immediately guardian will come. One of the parents or whoever is the guardian or a guardian appointed by the court, or even the court will become the ward. This fellow will become ward of the court. No parent, no grandparent, nobody, total orphan, then that, but rich orphan, then all his assets will be handled by the court. The court will appoint an officer of the court who will be, to whom this fellow has to report. So the entire assets will be controlled by that person or the parent or whoever it is. So on behalf of the minor, they will accept the rights. They will buy. Are you able to understand what I'm saying? So he is to have any shares. Such company issue right shares, then can such minor cannot do anything, keep quiet and sit, because up to 18 years, nothing. Oh, shit down. Who will do it? Mother, father, guardian, whoever has the right can do it. Obviously, they will do it. On behalf of the minors, to protect the minors' interest, they will do it. Definitely, they will do it. But minor cannot do anything. Simply keep quiet, because he is not having the capacity to enter into a contract. So I hope I have... See, Piyush, understand the principle involved here. Okay, minor's contract is void. Buying a share in a company is entering into a contract. Therefore, he cannot do it. On his behalf, his parent or guardian who is handling his affairs can do it. Nobody can prevent that. Are you able to understand? So, through a guardian, a minor can do anything he wants. But on his own, nothing. Simply keep quiet and watch. That's all. He cannot do anything. Except, of course, one or two exceptions are there. Necessaries, etc. But there again, only the minor's estate will be bound, Baba. Minor, nothing. He can simply go free. Because you cannot sue a minor. Okay? Minor cannot enter into a contract so as to bind himself. You know why I'm making this point so vehemently? Baba, I'm not going to answer that question, Aslam, because I don't understand that question itself. Ask a question, I will answer. Make a comment, I will ignore. If you want a question should have a question mark, and that question should be clear to me, then I will answer it. So what you have written, I'm not able to answer. My time is being wasted. That's why I'm not answering. It means bonus and rights issue are reserved for convertible debentures on their holdings. Yeah, your statement is correct. Is that what you want me to say? Your statement is correct. For convertible debentures, no, bonus and rights will not be reserved for convertible debentures. Who said that? Bonus and rights will not be. Only on conversion they are entitled. Till conversion, how they can reserve? No. On conversion, if they are converted, then those shares are entitled to bonus, those shares are entitled to rights. Till conversion, how they will be? So, are you asking a question or are you telling me? If you put a question mark, it is a question. If you don't put a question mark, it is a statement which is wrong. I will tell you that it is wrong. Okay, please. And again, try to avoid using capital letters while typing in the query pad. You know why? There is something called texting etiquette. Generally, as early as email period, if you put full caps, it generally means that you are angry. For your information, just check it out. It means that you are angry or something. So do not use full caps. All of you. Use either small letters or properly use, type out correctly with caps wherever necessary and type it out. Because don't use full caps. This is my suggestion, because generally when you are texting, if you use full caps, in those days, it meant, in email era, it meant you are angry. So prefer not to use full caps. Okay, see, again, you have put a blunt statement there. Legal representative on behalf of minor. What do you want me to do with this statement? Please stop putting such statements. If you want to add knowledge, please make a full sentence there, which is adding to the knowledge of the people. Don't simply repeat what I have put there. What I have told, don't repeat it there as a comment. Okay. Good. Moving on. But now why I'm making these comments to Mr. Aslam? No, he is dumping so much comment into the box, query pad. Query pad is meant for asking questions and genuinely sharing knowledge, which is relevant. Okay. Where maybe I have missed out or I made a mistake. For example, we had Parsardi coming in correctly and saying it's now T+1 and not T+2. Absolutely. I thank him for that. Like that, you are welcome to make comments. But please do not put dump data onto the query pad without any reason. Okay, I'm humbly requesting this to you. You are a good boy. I love you in my class. I want you to come regularly, but you have to change your behavior a little. Okay. Now, because we have to complete the syllabus. If you waste time like putting such comments, it will waste everybody's time. Okay. Issue of bonus shares is conversion of reserves into, see, for example, we have Kavita Chanda coming. Whenever she has a doubt, she asks me, I give her an explanation. She understands, she goes, no problem. I'm happy about that. That is why I'm here. I'm a teacher. Okay. If you want to also conduct the class along with me, please go ahead and do it. But I will not react to what you're doing. Okay. Issue of bonus shares is conversion of reserves into equity capital. You know that. This is see, in the 56 Act, there was no separate section for bonus issue. There was no section which said bonus shares can be issued. Only by implication we knew. In dividend topic, they will say dividend should be paid in cash. Exception was stock dividend, issue of fully paid up bonus shares. Only in that section, we had some kind of an indication for bonus shares. Similarly, premium. What you can do with the security premium account? There they said you can use the security premium for issuing fully paid up bonus shares. Only these two sections, there was a provision. Today, in the new law, in the 2013 law, there is a separate section that empowers the company to issue bonus shares. Okay. But again, issue of bonus shares is merely a book entry. There is no inflow or outflow of funds and all. Since already most of you are highly matured audience, you are well aware of the subject. I don't want to waste your time. Usually bonus issue is made in proportion, means 2:1. Means members holding 2 equity shares will get 1. So dividend should be paid in cash. See 123 subsection 5, you will read it when you come to dividend. At that time you will see, there they will mention, dividend should be paid only in cash. The one exception is issue of bonus shares by capitalization of profits. Okay. Now, whenever a bonus issue is made, the number of shares in circulation will go up. Am I correct? Suppose I'm making 2:1 bonus. Earlier there was people who are having 2 shares. Now they'll have 3. So the number of shares in the market will go up by 1/3. Am I correct? So to that extent, the price may fall. Believe me, many companies like Reliance and all, if they go for a bonus issue, maybe there'll be a small jerk and it will go down. But immediately it will correct itself and it will go up again. Why? Because there is a huge demand for Reliance shares. Okay, so if new supply comes in, it will be immediately grabbed like that. So this will be true for almost all blue chip, all good companies. Okay, only some good for nothing companies, if they go for a bonus issue, already there is no demand. Suddenly this fellow is increasing the supply, automatically the price will go down. Okay. You can issue bonus shares out of free reserves, securities premium account, capital redemption reserve account. 3 sources are there. We already saw capital redemption reserve when we saw redemption of preference shares. We said whenever there's a redemption of preference shares out of profits, an amount equal to the nominal value should be transferred of the shares redeemed, should be transferred to the capital redemption reserve account. Capital redemption reserve account cannot be used for declaring dividend, but it can be used for issuing bonus shares. We saw that when we spoke about redemption of preference shares. Lastly, very, very important, no bonus issue out of revaluation reserve. Because revaluation reserve is a notional amount. Moreover, you are increasing the fixed asset to the extent of revaluation reserve. To that extent, you will be having revaluation reserve in the liability. Every year, you have to provide depreciation. When you are providing depreciation, in the fixed asset value, there are 2 portions. One is the book value, the return, the WTV in the books. Okay, the cost minus then. The other is the actual amount paid is there in the books, yeah. Plus this inflated notional value you call as revaluation profit. So this amount is there. So whenever you provide depreciation, you have to provide on the entire asset value. To the extent of the original cost, you will charge the P&L account as depreciation. To the extent of the revalued portion, you have to reduce the revaluation reserve. So for that, at least the revaluation reserve should be there in the liability side. If you issue bonus share, how you will reduce the revaluation reserve? So accounting wise also, it is illogical to issue bonus shares out of revaluation reserve. Earlier, the law was not clear. So some companies used to stupidly allot bonus shares out of revaluation reserve wrongly. When in fact, one company, I qualified the balance sheet. I qualified as a recon. That was 1997. In 1997, the law was, before 1997, the law was not prohibiting bonus issue out of revaluation reserve. So some companies misused it and used to allot bonus shares out of, they will revalue the fixed asset. Then on the revaluation reserve, they'll allot bonus shares and increase the promoter's contribution. Then in 1997, up to 97, what happened now? The ICAI had got a guideline. Very clearly, for members like me, there was a guideline. We were told, if you find revaluation reserve being used for bonus issue, qualify. So we will qualify. But the company said, you qualify, I don't care, because there is no statutory prohibition. Your guidelines, your guidance not only applies to you, it doesn't apply to me. Like that, even member in service will argue with me. Now, I'll ask him, Baba, you are a member, yeah. No, sir, today I'm an employee of the company. Like that, he will smile. I said, go ahead. But in 1997, SEBI came out with a clear-cut guideline. They said, bonus issue not out of revaluation reserve. Even then, Companies Act was not amended. Now, the Companies Act itself is very clear. It says, no bonus issue out of revaluation reserve. Okay, so that is clear. Only out of these three. Now, what is free reserve? Anybody? Actually, it's part of the definition which I did not teach, but let us see. What is free reserve? What is free reserve? Any answers? Yeah, correct. Free reserve means such reserves which are, as per the latest audited balance sheet of a company, available for distribution of dividend. Beautiful. Now are you able to see? Now slowly you're getting into the habit of precisely defining words. Beautifully said. In fact, Danesh's word is correct, which is available for distribution of dividend. Correct. Available for distribution as dividend. Beautiful. Okay. So anything which is available for distribution as dividend is free reserve. In that sense, securities premium is not a free reserve. Capital redemption reserve is not a free reserve. Later on, we'll see debenture redemption reserve. That is not a free reserve because it is not available for declaring dividend. So on and so forth. Yeah. P&L account is a free reserve. But Sunil Kumar, you are not defining free reserve. You are giving me example of free reserve, which is correct. But definition is reserve, which is as per the latest audited balance sheet of a company, available for distribution as dividend. Okay. Abhishek Pandey gives the definition of free reserves, which is not under the Companies Act. Generally understood, free means not earmarked for any specific purpose. Okay. But kindly avoid that definition whenever you see the word free reserves in the Companies Act. Because the Companies Act section 243 defines a free reserve and clearly says thing. And yeah, I am well aware that general reserve and P&L account are thing. Okay. Now moving on. Some preconditions for issue of bonus shares we'll see, and then maybe we will stop. Yeah, because reduction of capital I will take tomorrow. If you want to issue bonus shares, there should be an authorization in articles. You have to pass an ordinary resolution in the general meeting. There should be no default in repayment of principal and interest on FD and debt securities. No default in payment of statutory dues. Partly paid shares to be made fully paid up. And there should be a compliance with Rule 14. That is, once announced, bonus issue cannot be withdrawn. Once announced, it cannot be withdrawn. Okay? Bonus issue should not be in lieu of dividend. You cannot say we are declaring 24% dividend, but we will pay it in the form of shares. Or this year, we are not declaring dividend. Instead, we are giving you bonus shares. No. If you want to declare dividend, declare. Bonus issue should be separate from dividend. Whenever there is an alteration of capital under section 61, or government gives a direction under 62(4), or the company redeems any redeemable preference shares, the company should file a notice in form SH7 with the registrar within a period of 30 days. Okay? As the company. Wonderful. So, in case there is any default in filing that form SH7, then penalty is there. Company fine of 500 rupees for each day, subject to a maximum of 5 lakh. Officer in default, 500 rupees for each day during which such default continues, subject to a maximum of 1 lakh. Okay. So, See, the goal here is not to say that somebody is wrong, but to say that what is correct. Learn it. Then, see, in general parlance, even no free reserves has that meaning, not earmarked for any specific purpose. Okay. In fact, in those days, there used to be a section, now it is not there. Okay, 293(1)(d), where in 56 law, not now. Now your 181C doesn't speak that language. Earlier they'd say free reserves, that is to say reserve not set aside for any specific purpose. In the Companies Act, now that has been removed. For the Companies Act purpose, free reserve definition 2 subsection 43. Fantastic. As usual, we had a wonderful evening. I hope you enjoyed this session as much as I did. In the next class on Friday, inshallah, we'll take up reduction of capital and go on to complete this topic, buyback and all that, and go on to debentures and close this topic. So with this, I thank you for your wonderful cooperation and wish you all a great evening ahead, and looking forward to meeting you on Friday. Inshallah, bye. Sir.